Ever heard of Monster Energy drinks? Yeah, today that's a pretty silly question. Everyone has heard of Monster Energy, but in the early 2000s, that wasn't the case. This was a brand that barely anyone knew anything about, and its stock was trading for pennies. It's why today Monster Energy is one of the most successful penny stock stories out there, and it's a perfect example of why so many investors are still excited about penny stocks today. But just like an actual penny, there are two sides to this story. For every success story, there's just as many complete crashes. And that's why it's important to note this video is not about telling you you should be buying penny stocks if you want to become the next big millionaire. We really just want to tell you more about penny stocks so you can understand what they are, how they work, where you can even find them, and all of the risks involved. So then you can actually go out and make your own decision whether you want to invest in these or not. So let's get started with the basics. What is a penny stock? Well, that answer depends on what your threshold is. For many people, it's considered any stock trading for under $5. Some people might consider any stock under $10 in the penny stock category, but others are purists and they want to make sure it's actually a stock trading for actual pennies. There's almost endless options out there that are trading at this low range, but where to find them can really be a challenge. There are a few penny stocks you might find on the New York Stock Exchange or the NASDAQ, but most of them trade in the over-the-counter market, which means there's not nearly as much oversight. Now, that's not necessarily a deal breaker. Some of these penny stock companies are legitimate businesses with a great idea. Others, not so much. There are quite a few scams that can come in the penny stock market, and that is where the big risk comes in. So knowing there's a risk, why are people drawn to penny stocks? That answer is pretty simple. The lure of the idea of making a $50 investment that turns into $50,000 after a few years of success for a little-known company. Or maybe it's that short-term gain of buying 1,000 shares of a really inexpensive stock that can see a 50% gain in just a few weeks or even days. That's why you'll find both traders and those long-term speculative investors are interested in investing in penny stocks. So wherever you fall in that category, you're going to want to look at different metrics on whether a penny stock might be worth your investment. If you're a trader, the most important thing to consider when looking at buying penny stocks is volume. If not many people are buying and selling a stock right now, you could buy in and get stuck at a not so preferable price. This is where MarketBeat's tool really comes in handy. We have a page on MarketBeat.com that will do all of the hard work for you. You can select any stock trading for under $1 right now, and it will order it based on which stock has the highest volume. So if you stick to the top half of this chart, you'll be doing pretty well on picking a penny stock that is seeing a lot of trading volume right now. But that doesn't necessarily mean it's a safe investment. There's a lot of pump and dump stocks out there where a promoter might try to gain some interest in a specific stock. They'll put a lot of information out about a penny stock just to try and get more buyers and raise the price. And as soon as that price rises, they'll sell for a profit, which can leave you stuck with a loss. If you're looking at penny stocks as a long-term play, you definitely want to focus on the future success of that business. Unlike regular stocks, where you can easily find earnings reports, their balance sheet, maybe some other information about the leadership in the company, those details are usually readily available, but not so much in the penny stock market. These stocks are a little bit more challenging to find information about, and even when you can find information, it's not always reliable. A lot of it is self-reporting from the company's website or maybe a press release that can have more biased information. That's where MarketBeat's penny stock tool for long-term investors really comes into play. This tool will help rank any stock currently trading under $1 or $5 or whatever your threshold may be based on the analyst ratings and consensus price targets. You can scroll through this page, click on the companies, and actually easily look at the charts or any other data about the company that you want to explore. These can be hidden gems for those long-term investors looking to buy and hold a stock. If that's you, a more growth-minded investor, you're also going to want to check out MarketBeat's free premium report on 7 stocks expected to be the next blockbuster stocks for growth investors. Scan the QR code right now or click the link in the description of this video to get that free report on MarketBeat.com right now. Now, we can't talk about penny stocks without talking about how to mitigate your risk. It's important to know with any penny stock investments, these are not things where you want to bet the farm. In fact, they suggest only about 5 to 10% of your total portfolio be in these more risky penny stock investments, and that's because these really are risky plays. You could just as easily lose any investment you put into a penny stock, even if it has great analyst ratings and good information and is a solid company. There's still a risk, and most of these are at an early stage where you could end up losing all of your investment. So don't invest any money in penny stocks that you aren't okay losing in the long term. If you're okay with that kind of a risk, penny stocks can pay off, sometimes in a really big way. Thanks again for joining us here on MarketBeat. As always, happy investing.